Hello everyone, this promises to be a really informative webinar today. My name is Steven Primo and I am the founder and president of Specialist Trading. For those of you who aren't familiar with Specialist Trading, basically what my website does is it offers unique education and courses for trading the stock, E-mini, and today most importantly, the Forex markets. So I'm going to share with you everything that I've basically learned from my 34-year plus career of trading. Just to give you a little bit more background about myself, I've been actively trading for over 34 years. I started on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. Now, for those of you who aren't familiar with what a specialist does, a specialist is basically in charge of roughly about 50 stocks. He makes the markets in them, and he controls basically what the price is going to be. But what happened after that is when I saw the handwriting on the wall, what was going on with the market, and that things were going towards day trading, I left the floor and continued to trade on my own. I managed money, trade from my own account, and most recently, in the past couple of years, 2 to 3 years, I've really gotten heavily into teaching and into mentoring. I worked for some websites where I was the director of education, but roughly about 2 years ago, I started Specialist Trading, which deals mainly just with my strategies and my techniques. These are actual things that I trade using in my daily trading. I make my living off of trading. Even though I mentor and teach, my income comes from trading. So I'm sharing with you basically all of the things and all of the concepts and techniques that were taught to me during my tenure on the floor. Now, I know a lot of you may say, well, Steve, you started out as a stock specialist. This is for Forex trading. But see, the beauty of what I learned and what was taught to me is that everything is, all the concepts and philosophies that I have in trading can easily be transferred over into any market. And especially, which I found in the Forex markets, because the Forex markets are the best trendy markets around. Much better than stocks, much better than any type of future you'll be looking at. They can go into trends, but then they go into these sustained sideways moves. But you're really looking for trends. The best ones are in the Forex market. So that's why we're going to be talking today, especially about a simple way to trade with the trend. This is probably one of our simplest but most common techniques we have at Specialist Trading, usually reserved for the members. I'm going to share with you this technique, and actually going to show you a couple of entry techniques as well. So once we find the trend, which is our first concept, our second concept is going to be how do we enter and have these high techniques in which to enter into the trend. Okay? Now before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a way to which to use the trend, show you a proprietary indicator, and then some entry techniques. But remember, we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, which we are required to state, I also want to say that we will be having, as with all of my webinars, a question and answer period. But I please ask that you wait till the very end to ask questions. For those of you who have seen my presentations before, I give you a lot of information, tons of information for free, and you can use this as early as today if you'd like. But I've noticed that we kind of, stop the flow of the webinars when we stop every 5 seconds to answer or ask a question. And most of the time, if you just kind of wait for a few slides, your question is answered in the next slide or the next section of the webinar. So I promise that we will get to each and every one of your questions, but just wait to the very end of the presentation. If for some reason we run out of time or I'm not able to get to it, don't worry, I'm going to leave you an email address as well as a phone number where you can call us and ask any questions that you may have. Okay? So please just simply wait till the end of the presentation, okay? All right. Now, my goal as an instructor, as a teacher, as someone who has been trading for 34 plus years, is to teach you how to trade with the Specialist Edge. And someone may say, well, what exactly is the Specialist Edge? Well, I started out probably very similar to you. I know a lot of you may be struggling with your trading. A lot of you may be struggling with your investing. You may be having, times where things are going great, and then all of a sudden you run into a tremendous, drawdown period where you give everything back. And I know exactly what that's like. I've been there before, and I know exactly how frustrating it can be to think you got everything on plan, you're doing really great, and you think you finally found it, and all of a sudden nothing works. There's no consistency to your trading. And this is really the way my trading was when I was on the floor. When I was a specialist, even though I was a specialist, I was making markets and stocks and I was controlling prices. I would have 2 or 3 fantastic months followed by a disastrous month where I gave everything back. Everything I had made, I gave it all back. And I continued this pattern roughly for about 2 or 3 years where I was just treading water. And so after that time, 2 or 3 year period, I really had nothing to show. I was just kind of, getting by. And it was very frustrating. And it wasn't until I met a few elite traders on the floor. These were specialists as well. But for some reason, these specialists were different than the others. They were able to consistently generate profit. Trade after trade, month, year after year. I mean, these guys just were able to be really consistent, regardless of what direction the market was going. If it was going up or down, regardless if we were in choppy markets or in trendy markets. So they kind of took me under their wing. They saw how frustrated I was, and they shared with me their simple edges, their simple concepts. And surprisingly, I thought that they must have some advanced indicator. They must have some, simple way that they were getting news earlier than anyone else, or they had, inside information. But really what they taught me was that their edge was the exact opposite of what everyone thinks. Their edge was really about stripping away these things, which I remember they told me was useless noise. Listening and relying too much on news, getting too much involved in trading rooms, things of that nature, having too many indicators or trading too many markets, too many time frames. What they tried to tell me was, when you simplify your trading, that's when you'll be on the road to being more successful. You see, as they said, it's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. And most traders, for some reason, we've been taught or we've learned that the more things we pile up into our trading plan, the more profitable it'll be. And actually, I found out that it's actually the opposite. The simpler you keep things and the more basic, the higher probability you'll have to being a successful trader, regardless of what market you're in. So that's the edge that they taught me. And it wasn't until I stripped away the things that, all the tens of thousands of indicators I was looking at and all the news I was trying to get and the data I was trying to get that was going to give me an edge, until I let those things go. That's when I started to become consistent. So this is the edge I want to share with you. And many of the things that I'll teach you in these webinars, which I give every month, are things that you've probably heard before or seen before. But really, it's not about whether you've seen or have known them. It's more about how you implement them. Because everyone will look back and say, oh, yeah, well, sure, he bought here, he sold here. But most people won't do it. It's because, they're waiting to hear a confirmation of what the commentator says, or they're waiting to see what everyone does in the trading room. If you just stick to the basic simple things and listen to what the market is telling you, rather than some outside source, you'll really bring your trading to the next level. So that is what I try to do in my webinars and in my class. Okay? With that said, that's my goal. I'm really interested in teaching you to bring your trading to the next level and to teach you how to trade with the specialist edge. All right, so here's what you're going to learn today. I'm going to give you 2 edges. The first edge is a proprietary indicator that we use at Specialist Trading in one of our primary strategies. Now, I'm going to share that with you, show you how to use it properly. Most people use it improperly. And then the second edge is I'm going to show you 2 entry techniques. Once you've found this indicator to help you find the trend, I'm going to show you 2 different specific entry techniques to enter and to trade within the trend. All right? Once we understand how this process works, what we're going to do is show you numerous chart examples, and so you'll really understand it, because I found that in my teaching, sometimes things get a little bit too wordy, and it's difficult to understand when you see a bullet presentation of where you should get in and what the trend is. It's better if you actually see a visualization of it. You see an actual chart and how it's been working in real time. So we're going to show you some chart examples. And then lastly, as I said, we'll have a question and answer period. So any questions you may have, or something didn't make sense, or you want to talk over a chart that we showed you, you'll be able to go over that, okay? So get out your pencils and papers. For the next 45 minutes or so, we're going to talk a lot and give you a lot of information. Remember, if you have a question, please wait till the very end. All right. Here's a picture of the Australian dollar. Here's a snapshot, okay? Now, this is a daily chart. We're going to be looking at daily charts off the bat. As you can see, we've been having this nice move from these levels here in September all the way up to November. So basically, you can see in hindsight that we have a really nice uptrend in place. Okay, but that's the difficulty. Most people can spot things in hindsight. It doesn't take, a rocket scientist to see that we've been going up. But looking back in hindsight, what you want to do is you want to take advantage of certain spots where you could have purchased, such as here, these low levels, and here again, and then here, and then ultimately here. These would have been the most opportune times, looking back in hindsight, where you could have purchased the Australian dollar. All right? Once again, it's the easiest thing in the world to look back in hindsight, say, oh yeah, well you should have bought there, but how can you do it in real time? All right, here's our first edge. This is our proprietary indicator. Remember I said this is one of the basic tools we use at Specialist Trading. These are the Donchian channels. For those of you who aren't familiar with them, they're a very common tool. You can find them on a lot of charting software packages. I know that you can do a Google search and find them for free many times on different free chart services. So they're very simple and very easy. If you don't get them, I would say contact your tech support, whoever you're using as your charting service, and see if they have the tool, the indicator, in-house, and they can email you the formula or give it to you. Okay, but it's a very basic tool. Most charting software packages have them. All right, so let's see how we apply the Donchian channels for helping us to trade in uptrends. Okay, then we'll turn things around and we'll see how we can trade in downtrends. Let's take uptrends first, since everyone likes when markets go up. All right, so these are the Donchian channels. As you can see, there are 3 channels. Now, you can format them to any color you'd like. These are the colors I use. All right, the top, middle, and the bottom channel, as you can see. And they kind of have this kind of jagged, they're not smooth like Bollinger Bands or a moving average. They're basically channels, and we're not going to go into detail of how the indicator is constructed or what it's based off of. We're just going to look at this right now. I would say go to Investopedia if you want an understanding of what the formula is for the Donchian channel. But what we want to see, if we're looking at an uptrend, is what we want to see is all 3 Donchian channels headed in the same stair-step upward direction. So as you can see here, we have this kind of like stair-step direction. Now, they're not always in sync. That does not matter. As long as they are all headed in an upward direction, that is fine. As you see here on the bottom channel, we are going sideways, but coming from a lower level. In the middle channel, we're actually already headed upwards, stair-step direction. And on the top channel, we're heading upwards and then have a sideways, then we're up. So even though they're not totally in sync, they're not moving at the exact same time, they're in sync in terms of their direction. They're all headed upward. So we want to see them all in sync, meaning that each line in their separate movement is heading upward, okay? As you can see here, they continue to head upward. All right. So what happens is, once price is going up, we'll see it'll come and touch the top line or close to the top line and then have a little sell-off or a pullback. Once it comes down to this midline level, this is our buy zone. All right, this is not a strategy. This is not an entry. This is just telling us we are in some type of a buy zone, okay? So we want to see price rally. As long as all 3 channels are headed upward, we want to see price rally, usually come and touch. It's much better if it touches and creates this new top line, and then come and sell off and come into this area of this buy zone. And as it does that, it'll, once again, rally again, touch the top levels, and sell off to come into the buy zone. And then we'll continue to rally as long as we are all in sync once the 3 channels are all headed upward, and then we'll come down lower into the buy zone. All right, you see how that happens? Now, this is basically just the concept. We're not really going to have to concern ourselves with, being this technical when we're following it. But we're basically just explaining to you this is the concept behind this. Remember, all 3 Donchian channels have to be headed in the same upwards direction for uptrends. This is probably one of the biggest mistakes my new students make, is that they'll say, well, we were in an uptrend, but then we'll look back and maybe 2 Donchian channels were headed upwards and 1 was headed downwards. So we always have to be in the same sync with each other. Remember, we'll answer any question you have. Please wait till the end, as I said earlier, to ask any questions. All right, so let's go back to the Australian dollar. Once again, looking back in hindsight, we're in a great upward channel here. We're going great and we're moving higher. But how could we have taken advantage of that? Remember, these are the most opportune places where you could have purchased the Australian dollar looking back in hindsight. All right, so let's add our structure, which are the Donchian channels. And now you can see how the concept is in play. We're coming up to this top level, this top area here, and then we sell off and come down into the buy zone. We touch or get very close to that top level once again, and then we sell off and get close to the buy zone. We continue to straddle or touch or come up to these high levels here, which formulate the high channel, and then we sell off and come down to the buy zone, and so on. Do you see how simple this is? And this is all done without having to be in any chat room, having to listen to any news. Everything is told right in front of you by just looking at this simple chart. Right? There's no need to complicate your trading by adding all these things that for some reason, once again, we've been taught will help us become more successful. Save your time, save your money, and learn how to look at the chart rather than anything else. This is what was taught to me, and this is what I'm trying to stress on to my students. All right, so let's look at the same concept in downtrends. Same exact thing, but we're going to now just flip everything over upside down. These are the Donchian channels in a downtrend. Obviously, we want them all to be in sync once again in this stair-step progression. But remember, when I say in sync, I'm not saying that they all have to have the same movement. As you see here, we have down, sideways, but the whole time the lower band was just going sideways. So they do not have to tick by tick be in sync. They just have to be in sync in terms of the direction. Okay, and they're all coming from a higher level, so that means the direction is down. So we have a downtrend in place. Now we want to see once again price come down and make lower lows while touching this bottom line, and then when it does, it's going to have a little bounce. And when it bounces back up to the mid-level, this is our sell zone. And someone would say, but aren't we just trying to pick a top because we're seeing it bounce, and then we're trying to sell and pick a top saying that the rally is over? No, because basically what we're doing is selling in a downtrend. See, this indicator is telling us that the trend is down, and until it changes, most likely we're going to go lower. So the point is, we're not picking a top, we're picking a top in a downtrend. We're looking to sell on a pullback, for lack of a better description, okay? Because picking tops and picking bottoms, just for the sake of picking tops and bottoms, are a recipe for disaster. Anyone who is a student of mine or has mentored with me or taken my courses know that I totally and absolutely disagree with picking any tops and any bottoms. There's no such thing as overbought and oversold. And I learned this the hard way when I was on the floor. I traded through the crash of '87, and trust me, I know that there's no such thing as something oversold or overbought. And I continued to trade during the great bull market after that. Things can go as high as they want, and as you've seen, things can go down as low as they want. They can go down to zero. Stocks have gone down to zero. So the point is, don't get caught up in that trap of thinking, oh, well, it's oversold or it's overbought. What we want to do is get in sync with the trend, and then we want to see a nice selling point if the trend is down. If the trend is up, we want to see a nice buying point. All right, and this is a good, easy, simple technique in which to do that. So we want to see price, come down to these lower levels, create these downward movements, and then bounce. Once it bounces up to the midline, this is our sell zone. And then it'll continue to do that. If the trend is strong, it'll come down, creating these lower levels, and then bounce up again to these mid zones, and then so on. You actually see this happen so much. It's so simple and so easy, but everyone is looking for the wrong things. They're looking for some commentator to tell them that the euro dollar is going up, or telling them that the dollar yen is going down, or seeing someone say it in a on a newsletter or something, when the market is telling you right in front of you what it's doing. All right, here's a chart of the dollar Swiss franc. As you can see, we are looking back in hindsight in a very sustained downward move, a downtrend. These would be the most opportune places, obviously, to go short. Looking back in hindsight, anyone could say, well, boy, I should have gone short here, I should have gone short here, I should have gone short here. But who the heck knows? I mean, there's no way to forecast it. Well, many times you do have an opportunity. If you're applying the Donchian channels, once again, you see we come down to the lower levels, we create a lower low, and then we bounce, creating these sell zones. Come down lower, get to the mid-level, and we're in a sell zone. Lower, come up to the mid-level, a sell zone. Come down lower. Once we bounce up to the mid-level, that's a sell zone, and so on. So do you see, the market, with the help of a few tools and learning how to listen, really tells you everything you need to know. All right, now let's go to our second edge, entry techniques. All right, because up until now we've just seen, what direction the trend is going. All right, which is very important, extremely important, because we're always trend traders. We're never trying to pick a top or bottom or buck, standing in front of a moving train thinking that it's going to stop just for us. We're always going with the trend, especially in the Forex markets, because as I said at the beginning of the presentation, these are the most trending markets of any markets I've ever traded. So you always want to be in sync with the trend, regardless of what time frame you're in. Once you're in sync with the trend, then you have to know how to enter. We haven't really talked about entering. We've just shown you zones of where an entry should be, but we haven't really fine-tuned the entry. So let's give you a couple of entry techniques. All right? Now, our first entry technique is an aggressive entry. Now, I would not suggest this for new traders or beginning traders, or I would not even suggest this for traders that really try to control and manage their risk. This is mainly for people that have a large enough account they can take on extra risk, because there is really no idea where you think that you may have a stopping point. In other words, when you enter, you're pretty much just thinking that we've gone up high enough and I'm going to sell, or we've gone down low enough in the uptrend and I'm going to buy. So the rule here for aggressive entry, once again, this is only for seasoned pros or people that have a large enough account, is to buy or sell when the price simply touches the mid Donchian channel. All right, this is an aggressive entry, and you can either do this by knowing in advance and seeing where that midline is going to be and just placing a limit order there, or what you can do is, if you're lucky enough to be in front of a computer all day and you're watching the markets move, once we touch that midline, you can simply buy or sell at the market. So these are two different ways to actually enter using this aggressive entry plan. Let me show you what I mean here. All right, here's a dollar yen. As we can see, we're in a very nice sustained upward move. We have all Donchian channels headed in the same upward stair-step direction. As we go up, we create and form these new highs here in the Donchian channels, but then we get a nice sell-off. Now, if you're using the aggressive technique, you would simply purchase once we get to the level. And what you can do is have a limit order right where this is going to be, or once we touch, you simply buy at the market. And as you can see, look what happens. The rally continues. And it continues until we have another sell-off. Now, someone here would say, well, someone that doesn't know the markets or is, once again looking at outside influences would say, well, I'm going to short it. We're too high, and this thing is rolling over. But once you have this tool, you'll say, well, wait a minute. All the Donchian channels are still headed upwards. We're still in an uptrend. I'm going to take a shot, an aggressive entry, and purchase right here. And once again, you didn't listen to anything outside. You didn't trust an indicator that was telling you we're way too high. The dollar yen can't go any higher. You just listened to the market, and the market was telling you, I'm in an uptrend. You should buy me. As long as I'm going up, you should only be considering going long. So purchasing on an aggressive entry here, look what happened. Now, the same concept works going short. Here's a sustained downtrend, okay? The dollar Swiss franc. We have all three Donchian channels headed lower. As the Swiss franc is headed lower, it'll go lower and create these new lows here and then rally and touch that midline. All right? This one point to sell in aggressive trading. It comes down lower, touches the midline again. Here's another aggressive sell. Comes down lower. Now, here's a perfect example why we call this an aggressive sell. This is why I do not recommend this for beginning traders or people that do not have large account sizes, because look what happened here. Had we touched this time, these last two trades, you would have said, boy, this is so easy. Boy, I love that guy Primo. He gave me this free information, and I'm doing great here. Then all of a sudden we touch, you sell, and look what happens. It goes straight up, and you might have gotten scared at this point and covered your position. But eventually it went lower. But see, it's aggressive, meaning that you have to have enough, account size to cover these, because sometimes it will not stop there. And sometimes the trend will change and it'll go against you. I'm not going to sit here and tell you that this technique works 100% of the time. So this is something that is very aggressive that you have to be very careful when trading this. So just because you simply sell here, there's no guarantee that we're going to stop each and every time at that midline. Now, oftentimes you will see it stop just as it does here. But oftentimes you'll see it go a little higher, maybe 50 or 100 pips, and that's, very dangerous for some people. They don't want to have to take on that type of a loss. And so they'll cover, and then look what happens. It goes the opposite direction. But going more in the future, we see that it worked here again, and then it worked here again. All right, so let's talk about a conservative entry, because we know now that this can be a very dangerous way to trade the aggressive strategy, even though it can be very profitable. You have to have a large account size, and once again, I would not recommend it for beginning traders. Also, all these techniques and things I'm sharing with you today, I'm always stressing to paper trade these things first. Even though you could, if you wanted to, go out and begin trading tomorrow or today, please do not do that. Paper trade for a while. Even the students who are members of my course, I always advise to paper trade. Whatever feels comfortable for you. A week, a month, 6 months, it doesn't matter. Just as long as you really fully understand the process and see how it works in real time. Because everything I'm showing you is a static chart. It hasn't changed. It's just looking back at the past. So many things come into play when you look at something in real time. So please, if you're going to use these techniques, paper trade for a while. All right, now here's a conservative entry. This is the way I would suggest if you are going to use this. Obviously, once again, paper trade this, but start off with this method, the conservative entry. Now, what the rules are for this is you're going to buy or sell when a price bar is completely below or above the mid-Donchian channel. So before we were just waiting for it to touch, but now we want to see, if we're buying, we want to see a price bar that's completely below. In other words, it's not touching the midline at all. Or if we're selling, we want to see a price bar that's completely above. It's not touching. Okay? Now, this is where I stated where sometimes it gets a little wordy and it's hard to understand, so let me show you a bunch of examples. Here's the euro. Okay? We're in a sustained uptrend. All Donchian channels are headed upwards. Now here we went down, but we didn't have a trade then. But once we started going up, we were back in sync again. All right? Now, as you can see, when we were headed up in the beginning, we touched and we formed this new top Donchian channel. Then we sold off. Now, if you were trading aggressively, you simply would have bought here. And we would have had a nice little bounce, but then look what would have happened. The conservative method calls for us to look for a zone here. This is not really a fine-tuned entry technique, but more of a zone to purchase. And we're looking for bars that are completely below the rising midline. All right? So where this bar touched, these two bars are completely below. And you can simply buy at the market. You can buy once we trade one tick above the previous bar, whatever you want to do, or 1 pip above. But you see how this is more conservative because you're purchasing at a lower level and you're waiting for a little bit of confirmation for you to head up. Now, we started to rally in the euro dollar. We sold off again. Now, if you were trading aggressively, you could have purchased here, and this would have been a nice trade. But if you're in a more conservative mode, you would simply wait for a bar to be completely below the rising upward mid-channel, okay? As you see here, we're touching, and nothing happened. But once we were completely below, you could have simply bought at the market, and there the rally continued. Looking at the Australian dollar, once again, you see how we have really nice sustained downward move, and we have 2 or 3 really nice conservative zones here to go short. All Donchian channels are headed lower. We bounce up. Now, if you're trading aggressively, you would have sold right here, but look what happened. For the next 3 or 4 days, you didn't have a sell-off. So many times, trading the aggressive method, a lot of traders get worried and they cover their short. If you're trading conservatively, you'll simply wait for a bar to be entirely above. Now, there are many choices you can have. You could simply enter the market. You can go short once we trade 1 pip below, and then look what happened. We bounce again, and then we have 2 entries you could have taken advantage of to go short because these bars are completely above the midline. They are not touching. It doesn't matter where they close. It doesn't matter what the high is, just as long as their range is above the descending midline. And then the sell-off continues. All right, so let's look at some more entry examples using both of those different techniques, and we'll see exactly how you could have implemented these 2 techniques in an uptrend or a downtrend. All right, here's the Australian dollar going into April, May of this year. We have a very nice uptrend. As you can see, we sell off. Now, if you wanted to trade aggressively, you could have purchased right here and waited for a little bit, had a kind of up move and then a sell-off. If you wanted to trade conservatively, you would have waited for this bar, which is completely below. You see how the midline is right here, and our conservative bar is completely below. Once you got that, you could have either entered at the market or 1 pip above, whatever you wanted to, but this is your conservative entry bar right here. And then you didn't have to wait for anything because the rally took off right after that. All right, here's a daily bar, the Swiss franc, going lower. Obviously, all the Donchian channels are headed lower. We kind of had a bounce upward here, but then they continued on their lower. Once again, if we have an out of sync with the Donchian channels, as you see here, the top channel is going lower, the midline is going up, and the lower line is going up. This means they're out of sync. But what this means is if you're in the trade, it's okay. This does not mean you have to exit the trade. This just means when we look for this 3 Donchian channels to be in sync for an entry or a setup bar. So they all have to be in sync if we are entering. All right. Once we're in, we really don't concern ourselves that much with the Donchian channels. They're used more as a guide, but we need them to be in sync only upon entering. So as you can see on these entries here, they were all in sync going lower. Here's your aggressive sell right here. This is why we call it an aggressive sell, because had you shorted the Swiss franc, you would have had to sit through a week or two of upward movement. And unless you have an account size big enough, we wouldn't suggest it. All right? Or if you're a beginning trader, this is going to be that's a tough 2 weeks to have some sleepless nights hoping and praying that the Swiss franc is going to go lower. If you're a more conservative trader, you had different options to get in. All right? And then the trend resumed downward. Once again, we have a little bounce. All of the trend lines, the Donchian channel lines, are still in sync, so we can enter short here on an aggressive move. Once again, though, as you can see, we had to sit through 2 or 3 weeks of sideways to upward movement. So had you waited for a conservative entry, which had a number of conservative opportunities here, that's when you could have entered. Now, once again, you could have just simply, on the very first conservative bar, sold at the market because we're much higher at selling than selling here. Or you could have waited and said, I'm going to wait. Maybe a lot of our students say, I'm going to wait for 2 or 3 conservative bars in a row. You know, things like that. It's up to you. We teach you different advanced methods on how to really implement this and fine-tune this. Here's a euro dollar, a daily chart once again. All 3 lines are going up. We have a sell-off. Now you could have purchased right here aggressively, but here's a conservative entry. You see all these conservative bars here. Once again, you could have waited for 1 or 2 or even 3 before you entered. Here's an aggressive entry once the rally sold off and we pulled back down to the midline. And here's another aggressive entry. Lastly, a British pound example. We're obviously going lower. This was just about a month or so ago. We're headed lower on a daily chart. We bounce up. Here's a aggressive entry. You could have entered aggressively. You may have had to stick through 2 or 3 days of upward movement, but if you wanted to trade conservatively, you would have sold either on either of these 2 bars, and then the trend was slowly continued in your direction. But as you see, here's another conservative entry right here. There's another conservative entry, and the trend ultimately went in your direction. All right, now this is where we start answering some questions, because I know a lot of you are saying, well, okay, Steve, these are all daily examples. You know, I trade intraday bars. I don't trade daily bars. Or I'm an investor. I look at weekly or monthly bars. All right, let's look at those bars. Let's look at some different time frames. One of the measurements we use at Specialist Trading, where a tool or a concept or an indicator is valid, is if it can transfer over into different markets and in different time frames. So let's see how this Donchian channel and these concepts work in different time frames. All right, here's a 60-minute chart of the British pound. All right, looking at this chart of the British pound here, we have all Donchian channels headed lower, coming from a higher position. We have a nice bounce. Here's an aggressive entry you could have had. This was at the beginning of June. And you could have sold right here and look at the nice sell-off on this hourly chart. Now we have another bounce. You have another opportunity to sell aggressively, or if you wanted to, you could have taken the more conservative approach where the bar is completely above the midline. Remember, the conservative approach states for the bar to be completely above the midline, but all the Donchian channels, whenever we enter, must still be in sync. We have to have them going lower. So we sell off once again, and then we bounce up. And here's another conservative entry once more. Or you could have traded aggressively here if you like. All right, let's say you're not a day trader. You're an investor. All right, let's look at a Euro-Yen chart, monthly chart. All right, let's look at and see how you could have taken advantage of this. Now, We're in a really nice sustain for 4 or 5 years upward move. All the Donchian channels, same settings, same indicators, same tools, nothing has been altered, are all headed upward. All right? So if you're an investor, if you like to hold positions for years, look at all of the aggressive entries you could have taken advantage of. Every time we come down to that level, you could have purchased the euro yen. Come down again, buy. Come down again, buy. Sell off again, buy. Sell off again, buy. And this was continuous for the past roughly 5 years or so. This was looking at a monthly chart. And I know a lot of investors say, well, I need to know what's going on economically. I need to know what's going on in the news. I need to know the shape of the currency, or what's going on in Europe, or what's going on with political categories and reasons. Well, once again, the market, the euro-yen market, was telling you there's no reason to really get over-involved in that, because I'm telling you right here in front of you that this is all you got to do. So this is what was taught to me on the floor, is that we give ourselves a burden of putting all this information on our plate, when really what it does is it only serves to confuse us and to complicate our trading. You keep it simple by not listening to too much news, not having too many indicators, not going to too many trading rooms, and you'll see that the market tells you exactly what you need to know. Please don't waste your time or your money. There's no reason to. Here's a 4-hour chart of the dollar-yen. As you can see here, we're headed lower. Here's a aggressive entry once we touch. Remember, you can either place a limit order there, or if it never touches that, you can just simply, or I should say you never are executed, you can simply just sell at the market. We head lower, we bounce back up, an aggressive sell there, sell off, bounce back up, and another aggressive sell. Okay? And then lastly, here's a weekly chart. Say you're more of a swing trader. You're looking at weekly charts. Here's a current weekly chart of the British pound. Now we have all Donchian channels headed upwards, so we're only going to be looking to buy. If we wanted to purchase on a weekly chart with an aggressive point of view, we could have purchased right here. But here is a conservative buy, roughly coming into the beginning of the year on a weekly chart. And look at the nice buy area you could have had, because the British pound was telling you to go long. Nothing else was telling you. There was no news. There was nothing. The only thing that was telling us to go long was the actual chart of the British pound on a weekly basis, telling this is an opportune buy area. And then look what happened. Now, look what's happened again. This snapshot was taken as of last night. And as you can see, we are in a current buy zone for the British pound. Does this mean that we're going to be headed and make higher highs in the British pound? No. Once again, nothing is guaranteed. But there's a little extra bonus. I would say, why don't you watch the British pound on a weekly chart? This is not going to be working on an hour chart or even on a daily chart. But on a weekly chart, continue to track the British pound. And you'll see if this concept works. I'm not going to guarantee that it will, but everything we've taught you and you've learned today shows you that we should be in some type of a buy zone, conservative buy zone, for the British pound on a weekly basis. Okay? So I invite you to follow along with that chart. All right. Here's some frequently asked questions, and then we'll get to your personal questions, but just things that you may have been thinking about. I'm sure a lot of you are saying while you're watching this. What about stop place? All right. The most generic and the most logical place to place your stop would be just below the most current low or the most current pivot. So if there was a pivot low and you went long, just place your stop right there. Because most likely, if you get in and then we head lower than that low, the trend is going to change. Okay? So just place your stop there. Now, if you're a member of Specialist Trading, if you're a student of mine, I teach you advanced stop placement. We give you different stop placement levels of where you want to trade if you're a conservative trader or more aggressive. These are for our members only, and they're not based solely on the simple generic stops. And then we also teach you, once we get to certain levels and certain formulas are resolved with the price and calculated, we teach you how to move your stop up and track the trade, so that sometimes at the very least you'll break even or even make a little bit or lose just a few pips on a trade that would normally look like a disaster. Okay? So your generic stop placement would be at your most current low if you went long, or your most current high if you went short. if you're a member of Specialist Trading, we teach you more advanced places to put your stop. All right, number 2, what about exit points? All right, well, this has to do with stop placement. Let's say you placed your stop, you're going long, and you place your stop just below the most current low. So your risk is, let's say, 100 pips, just to make it simple. The obvious answer is, you want a nice risk-reward ratio. We feel your risk-reward ratio should be 1.5 to 1 at a minimum. So if you risk 100 pips, you should place your exit with a 150 pip gain, all right, or better. If you think you can go higher, place it at a 200 pip gain. So you're making 2 times what you risk. Now, once again, these are just simple, very generic places to exit the trade. As a member of Specialist Trading, we give you our advanced techniques on where to place your exits and your stops. There's a specific formula that we have that tells you in advance where your exit's going to be. So you can decide whether you want to take the trade or not. All right? Next question, which time frames are best? Well, this is a personal question because it all depends on how much you want to trade. Now, when I first began trading on the floor, I wanted as many trades as possible. I was trading 1 million times a day. As I've gotten older, I only want to trade about 2 or 3 times a day. So what happens is all you have to do is adjust your time frame. If you want to trade a lot, well then apply this technique to 60-minute charts or less. I would say go no lower than a 30-minute chart. If you want to trade less, the way I do, only look at daily charts. I only look at daily charts or weekly charts. And if you really want to trade, very rarely, look at a monthly chart. Okay? Now, I know a lot of you will say, well, does this work on range bars or does it work on tick bars? Yes, it does, but I would only reserve that for more advanced traders. Starting out, especially new to this technique, I would just simply look at minute or daily bar charts. So if you're looking at more trades, look at a 60-minute time frame. If you're looking at less, look at a weekly. But don't get involved that much in the range bars or the tick bars. It works much better with those standard time frames. Okay, another question. How can we increase the success rate? All right, this is another technique usually just reserved for the members, but I'm going to share this with you. All you have to do is apply our buy-sell line. I've had webinars where I've talked about this before, so I'll share this with you again. And the buy-sell line is simply a 50-period simple moving average. So let's say you have all 3 Donchian channels headed upwards. You have a nice, either aggressive or conservative buy entry. You must see where this is in relation to the buy-sell line or the 50-period simple moving average. If the price is above the 50-period simple moving average, then go ahead and take the trade. Obviously, paper trade the trade. All right. But let's say you get a really nice buy setup, but you are below, price is below the buy-sell line. Do not take the trade. You're decreasing your chances for success if you go long below the 50-period simple moving average. All right. So this is how you can increase your rate of success even more, by asking yourself, where is price in relation to the buy-sell line, the 50-period simple moving average? Obviously, if you're going short, you want price to be below. If you get a great short signal, but the price is above the buy-sell line, I would suggest do not take the trade. Sure, you may see these work from time to time, but overall, in the long run, you're really betting against yourself. Okay? In fact, as a homework assignment right now, go back and look at your trades, the last 20, 30 trades you've had, and the winners and the losers, and see where your entries were in relation to the 50-period simple moving average. I can almost guarantee you that most of your winners were when you were in sync with this simple tool, and most of your losers were when you were out of sync with this tool. Okay. And lastly, someone says, where do I get the Donchian channels? Okay, as I said, I'm not a technical firm. We do not, Specialist Trading does not offer charting services. But I would suggest calling your charting software programmer and your tech support and see if they can provide the Donchian. It's very simple. Do a Google search for it, and the standard setting for the Donchian channels is a 21-period setting. Okay, that's the standard setting. If you're looking at a 30-minute chart or if you're looking at a monthly chart, every chart I showed you was the same setting. Nothing was altered or changed. This is once again how we determine an indicator as being valid. So we just used 2 simple things here. We looked at the trend, which was a very simple indicator. Once again, do a Google search if you can't find it, or ask your tech support. Or we looked at, the other second thing we looked at was to see where our high probability entries could be. Now we could have our high probability entry at aggressive or conservative. It's really up to you. All right, so let's recap. What did we give you and share with you today for free? We gave you the first edge, which is our Donchian channel indicator. This is a really strong tool we use at Specialist Trading for our members. And then we gave you 2 entry techniques, our second edge, and showed you through many various examples of how to implement those. All right? Now, at Specialist Trading, I told you my goal here is to teach you with the Specialist Edge. We offer numerous tools, numerous concepts, numerous different techniques. These are just 2 of our simple and basic ones. But I'm really inviting all of you to become a member of Specialist Trading. As you can see here, I give courses in stock trading, E-mini trading, and Forex trading. Now, each course comes with upwards of 10 specific strategies. Some have more, some have less, and each strategy is designed for that specific market in different time frames. Now, if you decide to become a member of Specialist Trading, here's what you'll receive. You saw the detailed instruction I gave you today, where you're going to get more personalized instruction such as that. You're going to get a lot more personalized instruction because of my care for you to really learn and bring you up to the next level. As I said, we have numerous Forex strategies, number of Forex strategies you can apply in different time frames. The strategies are built so that they can suit your trading persona. Some people like to trade a lot. Some people like to trade with little risk. They all have different categories and different personas to them. We also provide you with updates and signals. So while you're learning these strategies, you'll be able to check your homework and see if you got a buy signal in the dollar yen or a sell signal in the euro dollar as to what we are receiving as well. Remember, I don't want to just force feed you signals so that you don't understand what's going on and you're just blindly taking them. I want you to understand the process. And the reason why we furnish you with these is so that you can know exactly for yourself. We give you weekly webinars, archive videos, and then you're a lifetime member. Now, just let me show you a few of our Forex strategies. These are actual signals that were given to our members this past 2 or 3 months in the markets. We show you where the entry is, where the stop placement is, and where you should be actually exiting the trade. This was one of our other trades in Swiss franc. Should you decide to become a member, we have a special deal here for $4.95 where you can purchase one of our strategies, one of our best strategies. It comes with all this information, entries, exits, one-year trade signal alerts, and a PDF of all the rules. And for all of our FX Street members, we're reducing that price by $100 down to $3.95. Okay? Now, if you're interested, please give us a call at this provided number, or you can email my associate, Brett M. at specialisttrading.com. Or lastly, you can go to this website and purchase it on your own. I don't want to take a lot of more time here, so let's get to some questions. I'm sorry if I ran a little bit over, but I kind of get carried away many times with trying to teach you these different concepts and techniques, and I could speak for hours for free just giving you more and more information. So if you have any questions right now that I didn't cover, please feel free to ask them right now, and we'll go over them. Once again, if we run out of time, I don't want to step on anyone else's webinar speaking after me. Just send an email to bretm@specialisttrading.com or call us at 310-844-7220. We'll answer any questions you may have. Okay? You still have 5 to 6 minutes here, so feel free to ask any question that you would like. I purposely put the frequently asked questions slide up there because I know when I give these presentations, most of our students or people attending the webinar ask the same questions, such as, where do I place my stop? Where do I exit? Is there a way to increase the success capability? Question here is, you don't watch support and resistance. What about correlations? I often get this question, and this is just a personal point of view. As I said, I've been trading for 34 years. I trade stocks, futures, and the Forex markets. In my 34 years, I have found no consistency with looking at support and resistance. Now, I know a lot of traders do, and I know there's a lot of presenters that teach it, and I'm not going to badmouth anyone for doing that. That's fine. But see, I'm all about teaching you simple and basic ways to trade, and usually those types of techniques, correlations, support and resistance, are very difficult to understand because they're subjective. Someone may see a support, someone may see a resistance at the same level, depending on the time frame. So I want to keep things as simple as basic as you just saw. I don't want there to be any room for doubt or subjectivity, such as other methods are. Now, these people that trade that way are very successful because they've been able to master it. But it takes a real long time. I want to bring your trading up to the next level as quick as possible. And anything that's subjective, anything that gives you room for thinking more about it, like what should this be, will really take you a longer time. So I really don't stress any of those things such as correlation. Another question is, Michael, Steve, how is your new strategy 6 you showed us recently? Michael, that's a good question. Now, strategy 6 has been doing phenomenally. Over the last month, we made over $7,000 just trading one unit. That's a totally different strategy, not even doing anything what we showed you today. Totally different rules, totally different. It's doing very well. Plus, we've had a number of really good trades in the last couple of days. Strategy 6 is doing well. Strategy number 5 has been pretty much breaking even because the markets have been going sideways. We haven't had a lot of nice movement. So I think we basically broke even to made $500 for strategy number 5 this last month. Okay, but those are great strategies. Once again, if you're interested, you can buy them, pick them up separately at this particular number, 310-844-7220. How does this compare with the Bollinger Bands? It's not the same with the Bollinger Bands. This gives you a better sense as to the direction. We have specifically a different strategy that does incorporate the Bollinger Bands. We have a different setting. We use an entirely different setting than the standard default, and that's another great strategy we have as well. That is our strategy number 3. It's usually more for swing trading. But we use the Bollinger Bands for entirely different. We just kind of keep them separate. But I'm not going to put down the Bollinger Bands. They can be used as a great tool, but we use them for something totally different rules. Okay, so I just don't want to go into detail with that. Steve, if the current euro-dollar daily bar closes like this, looks like it's a conservative entry bar. I would say so. Yeah, I know. I can't think of off the bat. I know that right now the euro-dollar is setting up for some nice selling setups. I haven't looked at it currently in the last couple of hours, but I know that we are looking at that as a sell signal also for strategy number 6 as well. Steve, I checked a Donchian channels indicator in my platform, but it does not have the middle line. Okay, this is another common question. Don't worry, you can also substitute a 21 period moving average, a simple moving average for that. And I know many charting software packages don't have a midline. Go ahead and just simply put a 21 period simple moving average. Now it won't be as defined as a Donchian channel, but you can use it for your entries. Okay. You can always use MT4 chart. Okay, that's another answering that question. You can use a 20 or a 21 period, but I would stick with a 21 period just so I think. Any more questions? No, that's it. We have, I think, 1 minute left. I'm sorry if I'm stepping on anyone else's time coming in, but remember, if you have any more questions, please be sure just to simply, email us, email my associate. He can fill you in on more of the strategies that we have, or you can give us a call. Once again, if you want more information, simply visit protraderstrategies.com. There's a lot more information about my individual strategy courses. Okay. Great. There's an MT4 version with the midline available. Great. I think that pretty much covers it here. I don't want to take any more time. Once again, I thank you so much. We'll be giving you another presentation next month with more information, more insights. Please visit my website or visit these two sites. Give us a call, and we'll give you any information you'd like. Thank you so much. Have a great Festival de San Fermin. I know that started today in Spain and Pamplona, and have a great month of July. We'll see you next month. Bye-bye.